Hey guys, Ralph here from the In-Game Investor. I had Mario Ineco Monaco64 on my channel for an interview about the basis trade yesterday because he is an insider in the bond trading market, meaning insider. Well, he worked in it and I don't work in it, so I wanted to know what actually happens in these basis trades. So I spoke with him about the issue and I just wanted to give a little bit of an intro to this video because as of this morning, the basis for the 2-year treasuries, meaning the difference between cash bonds and the nearest future of those same bonds is now negative, which could impact the basis trade because if it's negative, then there is no profit to make on the basis trade where you sell the futures for a higher price and you buy the cash for a lower price. Well, now that the futures is a lower price than the cash price, things could start to go a little bit haywire. And we got here the 2-year treasury note, 2-year T note, which is the most popular paper to do a basis trade on, where you sell the futures, which would be the March 24, and you buy the cash, which would be December 2023, which it is now, December 2023, December 28, 2023 to be exact. And so we have here the settlement price for the March 2024 bonds is 102.312, and the settlement price for the December 2023 cash bonds is 102.315. Meaning if you buy the cash and you sell the futures, you will lose money. So what happens here? I don't know, but I guess we'll find out maybe soon, hopefully. And I hope you enjoy this interview with Monaco64. The mainstream media will say, oh, they're creating liquidity for the treasury market. But you know, I don't want any damn liquidity for the treasury market. They shouldn't be liquid. Let them go bankrupt. I don't want them to have liquidity. I want to have liquidity in like the housing market or liquidity in any other market except the treasury market, you know? Hey guys, Ralph here from the Endgame Investor. I got my good friend Maneco64 here. The reason I wanted to talk to you, Mario, is that I wanted to talk about the basis trade. I understand how it works, but I was never on the inside of bond trading. I was never working at an office or a desk or anything like that, but you were. So I wanted your perspective on how this thing works, what could go wrong with it, why it's happening now. As if you were still a bond trader, what would be going on in the office and how would it work?
Yeah, I mean, I did work in the cash bond market, but not for that long. And then I went on to become a treasury or government bond futures broker. So how it would work, it's really simple. You could do a basis trade for gold as well, but in this case, we'll talk about treasuries. So if my client wanted to go long the basis, he would go to his cash broker and buy, $1 million worth of 10-year notes or 2-year notes. And then he would call me and tell me to sell the 2-year note future or the 10-year note future. And yes, and he would try to net the difference at the maturity of the futures, which is really tiny. And that's why they used to do a big size in these basis trades. It's not worth, uh, doing it for just a million. So, like we were talking before, they could also go the client. They could go to a repo broker and borrow. Leave the cash there and borrow the treasuries and do I don't know 50 million worth of treasuries, and
Wait,
then
what do you mean leave the cash there and borrow the treasuries? What does that
well,
mean?
overnight, isn't it? They buy they've got cash, but they don't, they don't want to buy the treasury because it's a balance sheet thing. That's how the repo goes. And
Hmm.
then they're long the cash treasury. And like you said in one of your articles, in the future side, you only have to put about 5%, maybe 10% down. So you can
Hmm.
leverage it a lot. And back 20, 30 years ago, it wasn't a problem doing these trades. You just had to make sure at the when the maturity period started in futures that you would get the bonds, that you bought through the repo market delivered to you, and then you have to deliver the bond to the person who's long the futures, and then you net a little difference, and that's the basis. Uh, but even then, they had some problems sometimes. They said they're called when the treasuries, there are certain treasury, let's say that is the cheapest to deliver in the bond contract, they became special. That meant they went special. It means they
Wait,
didn't have,
what does
you
that
know,
mean, cheapest
like
to deliver? How is one bond cheaper to deliver than another bond? What does that mean?
yeah, because the futures contract has a if you look at the specification, it has a series of 10-year note uh, bonds that are deliverable that you can use to deliver for the contract.
Mhm.
And the one that has the cheapest repo rate is the cheapest to deliver. So you will go in the repo market and get that one. But the problem is, once you get to the maturity and you try to get those bonds from the repo broker,
Mhm.
he might not have it. So it would screw the whole trade up, and you might lose, money on one side. You couldn't really complete the bases. But
Mhm.
I think what's happening now with the fact that the Fed uh, controls so many treasuries, it's becoming less and less liquid, and yeah, there's a huge problem. And I think the basis trade was, uh, I think the BIS talked about it. A lot of hedge funds were doing that in 2019, and that's what triggered that repo geddon.
Right.
Rates went through the roof,
So
and that could happen again.
So what I don't understand is why is it happening now? Why is it all of a sudden like there's $800 billion involved in this basis trade, but it wasn't in 2021 or 2022? And why in 2019 but not 2018? Like what is is it just like mob think like one and I'll give you my theory and tell me if you think it's right or wrong. I really don't know, but it I think it might be something to do with there's so much money involved that's available from maybe the reverse repos. There's still all this leftover money, and then hedge funds are just trying to figure out a way to use all these hundreds of billions of dollars in the most boring trade that they could think of and just get free money from that. But
Yeah,
then that raises the question like, okay, so if they're doing this now, why weren't they doing it in 2022 or 2021? Like, why now?
yeah. I mean, I think it's because 2022, the last year and a half, if you go, the volatility, I think, in bond markets have been so high that they've given up, maybe going long or short treasuries. And like you said, it's a boring trade. I mean, the analogy for the repo or the basis trade is like if you stand by the I-95, which you should know,
Yeah.
and you run out and some of these trucks drop some pennies, and you
Mhm.
go out and try to get pennies. It's easy, but you could get hit by the incoming traffic, and I think that's what they're doing. And I think also it's the herd mentality. Someone else is doing a basis trade, and then you hear from the brokers, "Oh, so and so is doing that," and people jump on board. I don't think there's anything special, or maybe also because there was such a big crisis that came out of 2019 that maybe they stopped for a while and now they're back on it.
Oh,
It
so
could
you're
be
saying that
just
so you're
because.
saying they were doing it in 2019, but then
Yeah,
somebody got caught and nobody wants to be that guy that gets hit by the traffic on I-95, so they stopped for a while, but
yeah,
now they're back into it.
I would say so, yeah, because the BIS reported that it was hedge funds doing basis trades that created the problem. And the other thing, Rafi, I don't know if you've probably heard about this since 2014, or there's been problems with the liquidity in the treasury market,
Mhm.
and especially with the off the run bonds, which are the bonds that are old, old 10-year notes, old 2 years. And so a lot of the cheapest to deliver, sometimes they might not be the ones that are on the run, as they call. They could be old bonds, and if there's no liquidity, they put on these basis trades, expecting to get the bonds when the basis trade matures, and they don't get it, and that could be a problem. And I think that's why the regulators or the Fed, they could be worried, are worried about it.
I wanted to share this chart over here. I'm going to minimize our faces. So this is from bar chart. This is the 2-year treasury. Apparently, this is the most popular one to do a basis trade with. I have no idea why. Um, but I guess the numbers work out best. So I zoomed in on the COTs here, meaning showing how many the blue line here is the short position for hedge funds, right? So this was if we zoom out, you'll see that this is an all-time record for that time. So this is August 2019, right? So this is the record over here, and
Yeah,
it's at like what is it, like 1.55 million contracts short. And then you see here September 2019, right? There's a big jump and a lot of those shorts are covered, but there's still a lot of shorts, a lot of short treasuries. And so what I'm seeing here is like there's a big covering just prior to the apocalypse. The apocalypse is over here on September 17th with about 1.24 trillion short, or 1.24 million short. Um, so if we go into the zoomed out chart here, and this is the 2-year note for three years, right? Let's just go to 20, just so you can see the perspective. So this is the COTs here. This shows you the short
yeah,
position in 2 years, and we see we're pretty much at the
yeah,
2019 record.
yeah.
Is is this what
That
causes a apocalypse? Like it's
well, that makes sense because I mean that there's a lot of shorts because if you go long the basis, you buy the cash and you short the 2-year note futures.
Mhm,
So yeah, we are at levels like you said there that we're back to 2019 levels. I
mhm.
don't know if it will cause another repo apocalypse, but it's possible.
The money supply is still shrinking, right? So that means there's less dollars, there's fewer dollars. And if there's fewer dollars, then maybe one day one of these hedge funds is trying to borrow. I don't know how much they do. They say there's like 3 or 4 of them that are doing most of it, and it's an $800 billion total trade. So let's say one hedge fund is borrowing, let's say, I don't know, $200 billion in the repo market on one night. And then the money supply is small enough that that's not available anymore. And then what happens to them? They can't do the trade for that day. And then what do they have to do? Like the alarms go off, and then what do the people at the
Yeah,
desk have to do?
well, I guess or they just won't do the trade unless they've done one leg of the trade. They should, or yeah, I mean they have to roll it over every day, the repo. Yeah, if they can't do it, then they're gonna be, they're gonna have trouble in the futures market. They're gonna have to close out the
Mhm.
short position in the futures, and that
Right.
could lead to a lot of trouble.
Right. If they can't get the cash bonds, then they're stuck being short futures, but unable to
Yeah,
deliver into that. So they got to close the
yeah,
futures position as fast as possible.
yeah,
And
and
that means buy
with
it back.
no exposure to the cash. So, and this is supposed to be a hedge trade, and so
Mhm.
if they don't have the cash part, yeah, they could lose a lot of money, especially on 800 billion of
Okay.
futures
So
equivalents.
they can't cover with the cash, and so they're stuck with futures short. So they're gonna have to buy those back. So if they buy those back, that means the price of the futures is gonna go higher in like some kind of a spike. And that means that interest rates go lower on the 2-year temporarily,
Yeah,
while
but
the repo rates spike because there's not enough dollars. So the repo interest rates spike, but the 2-year interest rates plummet because they're buying back futures. Is that what happens?
it could. I mean, or maybe they can't lend the cash because they don't have that bond. It doesn't mean to say the repo rate might rise,
Mhm.
but the thing is, it's also leveraged. You know that it could do that. You know, you could see the repo rate rise and the futures drop. I think the not the futures, but the cash price go up and the yields go down. It's a mess. I mean, it's just the way this derivatives fiat currency system is built. And
Mhm.
yeah, these people, they don't really think about the system. They're just trying to maximize their profits and leverage as much as possible.
Right. Right. So, I mean, if these I read somewhere that one of these hedge funds made 1.5 billion dollars doing this basis trade over and over again. But if you think about that from a macro, zoomed out perspective, which is where my brain functions the best. These hedge funds, what they're doing is they're playing around with statutory futures leverage rules and making money for themselves out of that, and then buying things and take, like, let's say, they get their salaries, they get their riches, they can buy houses, and they take stuff off the market from us while they're busy shuffling this paper that creates nothing for society. But then the mainstream media will say, oh, they're creating liquidity for the treasury market. But I don't want any damn liquidity for the treasury market. They shouldn't be liquid. Let them go bankrupt. I don't want them to have liquidity. I want to have liquidity in like the housing market or liquidity in any other market except the treasury market.
Well, that's I think it's a symptom of the how huge the everything bubble, all this fiat currency system is. It becomes like a casino. And I mean, nothing was learned from the '08 crisis, and no one was put in jail, just like they say it in The Big Short at the end. And then people are going to blame immigrants and everyone else for all the troubles like we have now. Basis trade, like I said, it's to 20, 30 years ago was a boring trade, and now it isn't. But there's also other things we might not even have heard about that they're leveraging to the hilt that could come out of left field. And about the periphery, I think what's happening in Guyana, Venezuela is trying to take half of that country. That's another example, that the periphery will try anything when the core of the empire is in trouble. So yeah, I agree with you. And there's a lot of discoveries of gold coins that people buried, probably during the fall of Rome, that didn't become safe. So hopefully, the stuff that we have, we will be able to use it and not leave it for other people to unearth. But I think we just need to know that it's happening and do your best and not to be too, not be worried or fearful of it.
hmm Speaking of burying your gold and silver, how do you like the dirty man safe?
I like it. Yeah. Dirty Men Safe. I mean, my viewers like it, and you get a 10% off if you use Maneco 10, or is it Rafi 10 or Endgame 10?
Monaco 10 or Endgame 10. Use either one. Use Mario's code, Monaco 10. We'll give you some credit here because
Yeah.
you introduced me to them, and I like them. I like the guy. He's a nice guy.
Oh, I like it too, and they're very popular, and people like the safe. So
hmm
there you go. Some people say, "Oh, I could buy some PVC and do it myself." Fine, but I'm not good at DIY, so I think it's a really good product.
Yeah, I wonder what the equivalent of the dirty man safe was at the collapse of the Roman Empire. If we find some company that was making safes that you could bury underground, is that the
Yeah.
trigger that means that everyone knows, if everyone's buying a dirty man safe, we're it's already too late.
Let's hope not.
All right.
Okay.
Good. Well, have a great rest of your break and safe flight home, and I'll see you soon.
Yeah, and Happy New Year to you as well, Rafi. See you.
Thanks.